Welcome to The Explainer. Today, we are unpacking a massive fundamental shift that's happening in the crypto world. For years, it's all been about hype, speculation, and wild stories. But we're looking at a near future, around 2026, where the entire industry pivots, moving towards real, tangible value. That's the story we're diving into. And look, it's not just us saying this. For the longest time, crypto has run on big promises. But now you have all these major institutional reports pointing to the exact same thing. That era is winding down. The focus is shifting from just talking a big game to actually building real products, from narratives to actual revenue. So what does this execution phase really mean on the ground? Well, this isn't just some new marketing slogan. It's a massive change, and it's being driven by three things: new rules, new players, and most importantly, real-world utility. Okay, let's get into it. To really get what's happening now, we have to rewind the clock a bit, to the year that really changed everything, 2025. That was the watershed moment, especially in the United States. Basically, the entire playbook in the US got flipped on its head. For years, the industry was stuck in this pattern of regulation by enforcement, which, just created a ton of confusion and fear. That was totally replaced by a push for clear, predictable rules. And that legal certainty, that's what the big players had been waiting for over a decade. And this didn't happen slowly. It happened incredibly fast. It kicked off with new leadership at the SEC, major lawsuits getting dismissed, and then, boom, landmark legislation like the Genius Act. That single act finally created clear rules for stablecoins. Suddenly, the road was paved, and the floodgates for institutional money were officially open. So what was the result of all this newfound clarity? A whopping $170 billion poured into regulated products like Bitcoin ETFs. And that was just by the end of the year. We're not talking about a trickle here. This was a tidal wave. It was absolute proof that once the rules were clear, the big institutions were ready to jump in with both feet. Okay, so the guardrails are up and the institutional money is flowing in. The big question is, where is all this capital and focus actually going? Well, that brings us to the three key trends that are defining crypto's new utility phase. These are the areas where blockchain is solving real problems right now. First up, we've got something called real-world assets, or RWAs. The idea here is pretty simple but powerful. It's all about bridging the gap between the traditional financial world and crypto. Instead of just creating new digital assets out of thin air, you take existing tangible value and bring it on-chain. And we're not talking about hypotheticals. We're seeing everything from shares in private companies to chunks of real estate to carbon credits and even government bonds being moved onto the blockchain. So why does this matter? Well, it makes things that were previously clunky and hard to trade, it makes them more efficient, transparent, and liquid. It's a huge deal. The second pillar is the evolution of stablecoins. For a long time, these were mostly just tools for traders to hop in and out of crypto. But now, with that regulatory clarity we talked about, they're becoming the absolute workhorse of a new financial system. The best way to think about them is as programmable money. With stablecoins, a business can send cross-border payments that settle in seconds, not days. Or they can run a fully automated payroll system that pays employees in real time. They're the critical bridge. And finally, the third pillar, and this is where things get really fascinating, is the powerful convergence of AI and crypto. We're talking about two of the most disruptive technologies of our time starting to work together, creating entirely new ways for economies to function. And look, this isn't just science fiction. Picture an AI that manages a whole fleet of self-driving cars. How does it pay for charging, or tolls, or maintenance? Well, crypto provides the perfect, trustworthy financial rails for that AI to make all those payments automatically, with every transaction verified on a blockchain. The AI is the brain, crypto is the nervous system that lets it interact with the economy. So these trends are incredibly powerful, right? But here's the thing, they don't just build themselves. This new utility-driven era of crypto requires a really deep pool of professional talent to actually make it happen. So let's pull back the curtain for a second. Who are the people actually building this new crypto economy? What kinds of skills are in demand? And what does it really take to put these complex systems together? It really takes a whole village of specialists. You've got your smart contract developers who are writing the core logic. Then you have security experts whose entire job is to try to break the system just to make it safer. You need DevOps engineers to make sure the whole thing can scale. And of course, product owners to make sure you're actually building something that solves a real problem for real people. Now, here's what's really telling. Just look at the value the market places on these skills. The salaries are a direct reflection of the insane demand for talent that can build these secure and scalable blockchain apps. I mean, senior developers are easily commanding over $200,000. And if you look at the very top end, leadership roles like engineering managers are pulling in salaries north of $250,000. This is the clearest signal you can get. This isn't some niche hobbyist field anymore. It's a mature, serious industry that's attracting and competing for top-tier professional talent, pulling them away from traditional tech and finance. So, okay, we've got all this institutional money, all this professional talent building serious products. Does that mean the Wild West days of crypto, the pure speculation, is completely gone? Well, not exactly. Something else is happening. What we're actually seeing is the market splitting in two. It's bifurcating. On one side, you've got this new utility market. It's led by institutions, it's focused on compliance, real revenue. But on the other side, the speculative market is still very much alive, driven by retail investors, cultural trends, and high-risk, high-reward narratives. These two worlds are now operating with totally different rules and attracting very different people. So there's no question the utility market is being built for the long haul, with a focus on creating sustainable, real-world value. But that culture of speculation that defined crypto's early days, it isn't just vanishing into thin air. And that leaves us with one final, pretty provocative thought. As crypto splits onto these two very different paths, will they just continue to diverge, or will one of them eventually swallow the other? The answer to that question is probably going to define the next decade for this entire space.